we're ready to go.
Great. So we are going to call the meeting of the Audit Committee to order. I would like to welcome all the returning trustees to the committee. I'd like to welcome returning new trustee Lisa Cashman. I would like to welcome returning community member Andrew Spieler, as well as our new community member Roger Friedman. And with that, I will turn to our auditor from Colin Dankowski, Alan Yu. Thank you. Please.
All right. Thank you, Mr. President. Of course, my name is Alan Yu. Thank you for that introduction. I am one of the audit partners of the firm, Colin and Dankowski. The school district is required by state law to have an annual audit of your financial statements performed by an independent CPA, and my firm was appointed by the Board of Education to be your independent auditor, and we're also known as the external auditors of the district, as opposed to the internal auditor or your claims auditor. We have completed our audit for the fiscal year ended June 30, 2022. And we've provided to the audit committee a draft copy of our audit reports. So I'm here tonight to go over some of the audit results for the audit committee, as well as answer any questions the audit committee might have, after which the audit committee will make a recommendation to the Board of Education as to whether or not the Board of Education should accept the audit report. Okay. All right. So you've received several documents. You have the district financial statements, the extra classroom activity fund financial statements. There's a management letter where we make our recommendations about areas of internal controls that we noticed during the audit. And finally, there's a governance communication where we discuss the responsibilities between auditors and management, as well as to disclose to you the audit adjustments that we made during the audit. So I'll jump right into the financial statements. Obviously, that's the one document that's of the most interest. The financial statements, we did prepare it on behalf of the district, which we are allowed to as a non-audit service. And the draft financial statements was reviewed with Mr. Pappas, your business official, and with his input into the management's discussions and analysis area section of the financial statements. These financial statements, within the financial statements, you could really say that there are two sets of financial statements. There is one set that is based on governmental funds accounting, and these are called funds financial statements, and they show the operating results of the various funds of your school district. Your main operating fund is known as the general fund, as you know, and that's the fund that annually the school board and the administration would put together a budget, and that's primarily where your revenues are received and where your expenditures are expended out of and recorded. And at the end of the fiscal year, whatever the operating results might be, the results will be closed into your total fund balance. Okay, and so that's the primary indicator of the financial health of a school district. Okay. There are also various other funds, special aid fund, school food service fund for the cafeteria operations, that service fund, which is utilized when a school district, when the local government has bonded debt. So in the debt service fund, that's where your school district would transfer budgeted amounts of required debt service payments out of the general fund into this debt service fund, where the bond and long-term debt, other long-term debt, principal and interest expenditures will be recorded and reported. But it is very much a general fund expenditure, albeit shown as an operating transfer out of the general fund. The capital projects fund also is important because this is where your capital improvement activities are being reported, and the funding sources are typically borrowings from bond, general fund appropriations in terms of annual budgeted transfers from your general fund into the capital projects fund, capital reserves. You do have a capital reserve, and from time to time, you may obtain a voter's authorization to spend your capital reserve, and that's where the funds would go. so that you can spend, the district can spend it over a few years. Typically, capital projects, as you know, capital improvements would last longer than 1 year. And that's one of the reasons why capital fund is important for school districts to keep track of your cumulative expenditures. Okay, so those are the primary funds that they're presented in their own set of financial statements. And then there is an additional set of financial statements. Basically, it's more of a long-term view of the overall school district's overall financial condition. And it's like a consolidated financial statement where you combine all of your governmental funds and then add some commercial world elements into it. And by that, I mean long-term liabilities, as well as capital assets. In terms of capital assets, you think about your annual budget for equipment. In your general fund, it's an expenditure or an expense item. And it gets subtracted from the revenues that you receive in a given fiscal year. In the commercial world or in the real world, whenever you have a purchase of a long-lived asset, it's recorded on the balance sheet, not as an expense in the income statement, and then it gets depreciated over its useful life. So the GASB, Governmental Accounting Standards Board, which is the equivalent of the FASB in the commercial world, they some years ago came up with this idea that we need to show the long-term financial condition of local government. So we need to kind of be closer to a commercial world. And so your district, like all governments, have to perform these what we call GASB 34 conversion journal entries in order to go back in time, claw back all these expenditures, capital expenditures, and convert them into capital assets and apply depreciation. So that's on the statement of net position which is a balance sheet really, as capital assets. And then on the other hand, on the liability side, now you have bonds payable, or you have a new energy performance contract installment debt. So those are long-term liabilities, which, as you know, annually you budget for the required debt service. But in this long-range consolidated financial statements, all those long-term liabilities are presented as your district liabilities, because they truly are your district's liabilities. And then there are other elements of governmental accounting requirements, OPEB, other post-employment benefits liability. That's a health insurance for retirees and future retirees that, like all local governments, your district has to come up with the actuarial calculation and then put a value on your balance sheet as well, and making it a liability. So those are just some of the main differences between the two sets of financial statements. But it can be confusing because when you look at this long range financial statement, and you look at the equity on that financial statement, on that statement of net position, oftentimes it's a deficit for local governments because you have long-term liabilities, and yet you're not required to, nor can you, fund for these long-term liabilities. You're not looking to fund your other post-employment benefits obligation of $135 million. You simply aren't. That's more than that's just about your annual budget. Okay. Yet it's the first page of financial statements. So sometimes people would look at this first page statement of net position, which is page 19 on the draft reports, and they would think that the district is in a very, very poor financial condition. But that's simply not the case. That's just some of the nuances of governmental accounting. So the focus should be on the general fund, and should be on the fund statements, which on the draft financial statements is page 21 and 23 is the income statement, if you would. So if you look at the general fund column on that page, general fund balance, okay, is at the bottom after total assets and liabilities. Your general fund total fund balance, okay, is a very healthy $22.8 million. On page 21. $22.6 million, my apologies. Okay, so we've also listed all of the available restricted reserves that your district has. Restricted reserves are just that; those are reserves, funds, or separate bank accounts and separate savings account, if you would, for restricted purposes, whether it's for workers' compensation payments, and employee retirement system contribution payments, teachers' retirement system contribution payments. That's a relatively new reserve. So those are the special funds that the district has set aside and has funded. And then in future budget years, when there is a need, you could go to those reserves and appropriate from those reserves to help fund the budget, as you have done so in the past. You have in the past appropriated from the employee ERS reserve, the employee retirement system contribution reserve, as well as the workers' compensation reserve. You also have a repair reserve, and as you know, you have this past fiscal year, you have authorized to spend $580,000 out of it for HVAC repair projects. And at the same time, your district has addressed one of our prior year's recommendation, and you have transferred back the unspent balances of some of the projects were funded by repair reserves, and those were transferred back from the capital projects fund in the 21-22 fiscal year. So at $22.6 million, which is roughly about 20.3% of spending. So that's your total fund balance in relation to your actual expenditures. That's actually quite good. It's very reasonable. And I have been your external auditors for several years now. This is the 7th year, and we've seen a steady decline in the total fund balance, and that's with good reasons. As you know, the district has received these special grants in the past, and you have steadily been spending down these special grants over the years. And the 21-22 fiscal year is the last year where you had $1.15 million left in these special designated funds, and you have now utilized it fully, and then the final balance was utilized in your 22-23 budget in the form of additional appropriated fund balance. So the unassigned fund balance at $4.63 million, that's the number that's the amount that is measured against 4% of next year's budget. Okay, so the legal limit set by New York State Real Property Tax Law, Section 1318, is 4% of next year's budget. So your district, as of June 30, 2022, was in compliance with that real property tax law. Okay. All right, then if you would go to page 23. That's the income statement, if you will, just again focusing on a general fund. We have revenues, less expenditures, and then we have other financing sources and uses, and that's basically the operating transfers in and transfers out that I was referring to earlier. So overall, your total revenues came in at a little more than $110 million. And at the bottom line is your district actually general fund had basically a break-even year. The very small operating surplus of about $16,000. Total revenues at $111 million, including the operating transfer in that came back from the capital projects fund earlier, that I was referring to earlier. It's about a $3.6 million increase compared to the 2021 fiscal year's total revenues. The $3.6 million, $1.5 million, about 1.3, excuse me, million came from tax levy increases. And then another almost $700,000 were in additional pilot revenues received, recognized during the year. So the tax and pilot revenues combined made up the $2 million out of the $3.6 million revenue increase compared to the previous fiscal year. Non-tax revenues went up by $1.6 million, primarily came from additional state aid, a little over $1 million. Also transfers, as we talked about earlier, transfers that came back from the Capital Projects Fund this year, which you didn't have a year ago. And finally, the district did receive additional federal aid in the form of FEMA reimbursements because of the COVID-19 expenditures. So that money was finally received in September 2022 and is recorded as a receivable at the fiscal year end of June 30th. So those areas accounted for the revenue increase. And on the spending side, the total expenditures, including other the transfers out, again, reminding everybody, the transfer to the debt service fund really is the district's obligation to pay for the long-term debt, principal, and interest. And that transfer actually into the debt service fund, if you look at the debt service fund column, $4.45 million went into the debt service fund, but the actual debt service expenditures were more than that. It's $4.9 million. So the district consciously utilized some of the fund balance within the debt service fund towards your annual debt service obligation. Okay, so it's another form of utilizing the fund balance, total available fund balance towards expenditures. And that within the debt service fund, the revenues, if you will, that we go into the debt service fund primarily came from premium, bond issuance premium, bond anticipation notes premium. So those are revenues that are required to be used for debt service. So that's where they would be recorded. And you'll see this year there's a $169,000 miscellaneous revenue under the debt service column. That's what that is. That's a premium, issuance premium that came from the bond anticipation notes. Interest earnings earned on bond proceeds and debt proceeds also required to be accumulated in the debt service fund, also for payment of future debt service. So, again, I know questions have come up in the past about fund balance in the debt service fund. Your district has been using the debt service fund, fund balance, obviously, not in its entirety, but partially towards paying for that service. So going back to total expenditures, including transfers out, it's at $111.3 million in total, which is roughly about $280,000, $282,000 higher than the previous year. If we take away the transfers to capital fund, because actually in the 2021 fiscal year, there was a $1.7 million of transfer to the capital projects fund for certain capital projects, and you might remember them. So the middle school library, air conditioning, Glenwood Landing, the corridor roof, also the high school generator project, as well as district-wide telephone system and the network switches. So those four projects were funded by general fund appropriation in the 2021 fiscal year to the tune of $1.7 million. In the 21-22 budget, you did not include any transfer to the capital projects fund. The only transfer was, as I mentioned earlier, the repair reserve of $580,000. So if I take out the transfer to the capital projects fund from the equation, your total expenditures actually went up by about $1.4 million, roughly about 1.3%. The areas that went up, salaries went up by about 1%, about $690,000. Employee benefits went up by almost $1 million. It's the usual suspects, health insurance, as well as teachers' retirement system, the required employer's contribution, those also went up. Percentage-wise, They went up by about 9% for health insurance and about 6% for the teacher retirement system contribution. Also, debt service, in terms of the transfer to the debt service fund for debt service, that also increased because your district did borrow a bond, as you remember, a year ago, as well as the new employee, the energy performance contract. So the debt service requirement did go up, and that's an increase of a little over $1.1 million. But there are also areas where the expenditures did go down. Legal expenditures, you may remember I discussed this last year, 2021 fiscal year, the legal expenditures did go up quite a bit from the previous fiscal years. And it was $950,000 in 2021 fiscal year. In the 21-22 fiscal years, that did come down quite a bit by 29%. That came down by about $280,000 to $670,000. So it's not quite at the level from several years ago. I think on average, you've been spending really more like anywhere from $250,000 to $400,000 in the past. But it's trending downward, which is a good thing. Also, the instructional media computer purchases in 2021, the district did purchase 1,300 Chromebooks, so that was a significant purchase, and you didn't have that in the 21-22 fiscal year. So that expenditure category also decreased. Tax anticipation note interest expense, that actually went down compared to the 2021 fiscal year. Your net interest cost after applying the premium received was less than $13,000. But we're already seeing that that's going to change going into the next fiscal year for very obvious reason. The interest rate is just through the roof. In the 21-22 fiscal years, TAN borrowing, the interest rate was 1.5%. In the latest one that you just issued, the tax anticipation note, it's 4.5% increase. So, fortunately, that would cost the district additional money. So, all in all, the areas that we tested, they appear to be reasonable. We did not have any material weaknesses identified during our audit. And, financially, your district is stable. The one thing I do also want to point out, which is in the financial statements, is that the overall expenditures and open purchase orders in the form of encumbrances amounted to 98.6% of your budget. That means your district once again has done a very good job, with budgeting, and historically, that's always been the case with the COVID year being the only blip, and that's the only blip for many school districts as well. But your district historically has been spending, anywhere from 96% to this year is the highest, 98.6%. So once again, I think the board and the administration certainly have done a very good job consistently in managing your budget, and no one can accuse you. Certainly not from me, nor from New York State Comptroller's Office, that no one can say that your budget was has too much fluff. Any questions about the financial statements?
Steve or members of the committee? You indicating you want to speak?
Thank you once again for preparing such a detailed analysis and taking the time to look at our finances. I did have a couple questions. One sort of general. One of the responsibilities as the external auditor, aside from preparing the financial statements, also is to test for internal controls. And maybe you can give us a little synopsis of what procedures that you use, and just for my own general interest, I think the general interest of the community. To be clear, I'm not accusing anyone of fraud. Maybe
Right.
requesting some spending, but just to have an idea what exactly you do, what exactly you look at, what do you test?
Right.
I think that would be helpful.
So certainly. So, the areas that we look at in terms of internal controls over financial reporting is primarily focused on the financial cycles. Okay. So it's the payroll cycle, the cash disbursement cycle, as well as the cash receipt cycle. On the other hand, we also consider the possibility of management override. And so we would test the journal entries as well. For journal entries, we actually scan and review all of the journal entries made during the year. And then we select, 40 journal entries. That's basically our standard starting point in terms of testing sample size for internal controls. And we would, test the journal entries for approval, whether or not there is supervisory approval of the journal entries. Okay. And in terms of the payroll, it's also based on a sample. And we would start with interviewing district personnel, finding out whether or not there have been changes in their procedures. From the procedures, identify internal controls that are in place within the procedures, and we test for those internal controls to see whether or not they, in fact, were operating effectively. That's the internal control side, but we also test the numbers substantively. Okay, for the payroll, what we also do is an analysis based on contract pays. Okay, so we're able to download information from the district for individuals, teachers who are on contract pays, and we compare the change from one year to another as far as the individual's pay to see if there's any outlier that would jump out and that would not fit within our expectation of a normal salary increase. And if there are such outliers, we ask the questions. Maybe there's a lane change, or there's a person maybe attaining additional credits. Okay, that would allow them to not just move up a step in the pay scale, but also move across lane. Okay, so those are the procedures that we do, and also we look at the 941 payroll tax returns reconciliation. Okay, and that is actually a very effective tool to help us identify whether or not there were expenditures that were not recorded properly. Okay, so those are some of the things that we would do with your payroll expenditures. And then in terms of the other expenditures we perform, on the cash disbursement side, it's similar to the payroll side, identifying the procedures, identifying the internal controls, test for those internal controls, and in our samples, we also look for approvals. There a purchase order in place? Were the invoices, do they match, or are they reasonably close to the purchase order amounts? Were there proper sign-offs and approvals by individuals receiving the goods and services? And whether or not the expenditures being recorded in the codes were recorded in the right codes. Okay, so those are all the areas that give us, a certain comfort level that the expenditures are reported properly. And then we look at variances. Again, we look for answers. Okay, why does one category the expenditures change from one year to another? Are the explanations given by management reasonable? We would look at additional invoices that are recorded in certain code to help us basically gain confidence in management's responses. So those are some of the techniques that we would do on the revenues and expenditure side. On the revenue side, there of course it's based on the actual amounts that came in. We look for revenue recognition is another area that we always focus on, making sure that revenues that should be recognized in this current fiscal year are recorded. and revenues that are for the next fiscal year are not recorded in the current fiscal year. Okay, so we look at the amounts of the transactions. Okay, and that's how we would select judgmentally some of the receipts that we would like to look at. And also for state aid, there is on the state aid web on the New York State Education Department website, there are reports available for most of their state aid really, and we compare the amounts reported on those state aid reports, to what the district has recorded to help us identify whether or not the revenue transactions were recorded properly. And balance sheet items, there is, as external auditors, we do not look at 100% of population. That simply is not the case. So we do look at materiality. If certain account balances are material, we will test the account balances as of June 30th to see whether or not they're reasonably stated.
The button. But speaking, it'll catch you.
Gotcha. Okay, good.
There's a millisecond lag, but
You said, you mentioned materiality. What is the threshold if something is not within a standard?
It is actually quite high. It's about $400,000.
Anything that falls below $400,000 is not necessarily tested.
So that's correct. Yes.
Gotcha.
Good.
Did management provide all the information that you needed to fulfill this audit?
They have.
And there were no surprises?
No surprises, no.
Additional procedural issues that needed to be addressed or that you would need to make recommendations?
I have recommendations in the management letter, but operationally from an internal control standpoint, I don't have any reservations or significant concerns.
You work with a number of other school districts.
My firm audits almost 50 school districts. Myself, I have 15 external audit engagements.
And how does North Shore stack up in terms of internal controls and adherence to accounting standards and such?
It definitely, in the upper echelon. And to be fair to, other fellow school districts, if you will, because of all these stringent audit requirements, thanks to Roslyn, most school districts really have, tightened, really tightened, improved their internal controls over the years. There's still, some that, due to, for a variety of reasons, they may have some challenges, but North Shore School District is not one of those.
You mentioned in your letter that you have a high degree of confidence in these statements, but it's not a 100% guarantee that there's something that you may have missed.
That is correct. That's the inherent limitation, really, of an external audit of financial statements, because it is based on audit sampling, and as I mentioned earlier, and actually, I did mention that also at our audit planning meeting, it's not a forensic audit and it does not involve the examination of 100% of the items or transactions. That's simply not the function of the external audit of financial statements.
Got two more questions. You mentioned that we have about 23% reserves to income, I believe, or to total budget.
About 20.3%. Right.
20.3. Okay.
Correct.
And that was a good level. Where does it get to be too high, and where does it get to be too low?
So New York State, would not really come out and tell you exactly what they think is the appropriate level. So you kind of have to, from various different sources, to figure out what is a Goldilocks zone, if you would. One of the areas that we can get some clue from the OSC, the State Comptroller's Office, is their fiscal stress monitoring. schedule, system. In their fiscal stress monitoring system, they assign points as far as the financial health of a school district or local government. Fund balance is one of the areas that they look at. There, they have 10%. If municipality or school district has total fund balance of 10% or less, they start giving them fiscal stress points. Okay, so you can then say 10% is the floor that they would hope local governments have at least 10% in total fund balance. Okay, then as far as the upper limit, what is it then? They've never really come out and said, the DOSC once again, and said, what they think is appropriate. They have at certain times made reference to, actually in one of their published document, they did make reference to a recommendation by another organization called the GFOA, Government Finance Officers Association. The GFOA had made a recommendation to local governments that they should have at least 2 months worth of operating expenses in their fund balance. So that equates to roughly about 16.7%. Okay, so you would think then between the 10% and the reference to the GFOA recommendation that the state would feel comfortable anywhere between that range, 10 to 16, 17%. Okay. For school districts, it gets a little bit more complicated because first there's the 4% requirement on your unassigned fund balance. Secondly, school districts do have a number of legal reserves that school districts are allowed to set up. And most of these legal reserves do not have a cap on them. They don't have a legal cap on them. And therefore, it's up to individual school districts, school boards, and their communities to decide, what is appropriate for your particular school district. What is the level that you would feel comfortable with. I have other clients that have total of 35% of fund balance. Their fund balance is 35% of their total spending. Okay, but they're transparent. They've always been transparent with their finances. Their community knows how much money they have, and they're okay with it. And they actively utilize their fund balance as well or their reserves to pay for expenditures. On the other hand, another district of mine, also a high performing district, they believe more in the 12 or 13% range, and so they have minimal reserves. Although that's starting to change now, they're starting to build that up as well. Having fund balance is not a bad thing. It's a crucial thing. You need to have fund balance. It's your savings account. So the question of how much is too much, it needs to be really looked at, and individually, and that's why we aside from the 4% of unassigned fund balance, we don't, or if a district exceeded legal reserve legal cap, for instance, the teacher retirement system reserve does have a legal cap on it. Then we'll make our recommendation of making an audit finding. Okay.
I mean, having looked at other districts, we're in the area, we're right about in the middle.
Right. Yeah.
And the last question is, you mentioned that you do a lot of testing. How many different accounts would you test?
It's okay. So it's hard to answer that question, right? Because it's when you look at the balance sheet, cash, we test it. Receivables, we test it. If you have prepaid expenditures, depending on the amount, we may or may not test it. But that's primarily and that's for the general fund. Those are your assets. And then on the liability sides, accounts payable, we test. Accrued liabilities, we test. Due to teachers' retirement system liability, we test. Deferred revenues, we test. Fund balance transactions, we test. So the entire balance sheet, unless the amounts are small, we tested the entire balance sheet amounts.
Thanks, Roger. Other questions from the committee? Trustee Russo?
Good evening, Al. Thank you for your report. It was very thorough, as always. The FEMA recovery that
Yes.
you noted, 236,755. we have, I think, correct me if I'm wrong, Jamie, we've tracked our COVID expenses and are looking for reimbursement for those COVID expenses for FEMA. This is not representative of what we anticipate recovering. That's just what we've recovered to date.
That's correct.
All right, because there's millions of dollars that we filed for, correct?
Well, we continue to file. Right now, we have about $800,000 that have filed, and we're waiting for approvals and reimbursement for.
All right, so we haven't received that yet, so that's not reflected in that number. This is just what we received to date. So we can anticipate receiving more reimbursement. What's the timeline on that generally? Because I didn't know we even have received anything.
Oh, and this was filed from last year and just received a couple of months ago in
Right.
September. We do have others that have recently been approved or on the way to approval. So probably in this current fiscal year, we'll receive hopefully another $500,000 or $600,000.
That will be counted as additional income that we did not anticipate when we were planning the budget, correct?
Correct.
And that will go towards the fund balance at
That-
the end of the year.
Right, well, that were correct. That would become part of your general fund balance, and then depending on the other various areas of, revenues and expenditures performance as well as your reserve. So ultimately, it will become part of your fund balance, yes.
So that could be potentially money used to offset the budget the following year because it would increase your fund balance.
That's correct.
Yes.
Okay. My second question is about ERS and TRS. We have reserves of about 2.57 in TRS and about 5.2 in ERS. I happened to look up the funding status of TRS as of June 30th, 2021. It's 113% funded. We could take money out of those reserves to offset our obligations in next year's budget planning for our TRS and our ERS.
Right, so yes, the reserves are there for if you want to appropriate partially or part of it from those reserves towards, the following year's budget, especially if and when the required contribution rates increase, and your annual TRS expenditures is quite high. It's $5 million. That's your annual 1 year. That's just this past year. As the contribution rates go up and salaries go up, I should say yes, payroll goes up. So would the TRS contribution expenditure. So right now, the TRS expenditure, the TRS reserve, the balance is about $2.6 million. So it's not quite 100% of your annual expenditures yet.
Because it's a new reserve.
That's correct. That is
So
correct.
I think the past 3 years.
That is correct. And legally, you can only fund 2% of teacher salaries every year, up to 10% maximum. And your contribution rate is almost at 10% already. So really, at most, the state allows you to reserve no more than 1 year's worth of TRS expenditures in that particular reserve. So, but like other reserves, yes, you may appropriate from those two reserves towards the following year's budget, 23-24 budget, if necessary.
On the classroom activity fund, there were some large balances in some of those extra classroom activity funds. Was there anything, I didn't note anything unusual, were you putting any notation on them? Some of them I think are for trips, other ones it seemed to have a carry forward balance. Are there any guidelines that we need to be looking at in looking at the classroom extracurricular funds, for the clubs, the classes that we have to be cognizant of in terms of tracking that money and returning monies, those balances to current members of the club, especially in light of seniors graduating?
So that's a very good question. There are guidelines. There are state guidelines and requirements, which your district actually a few years ago has put together a comprehensive procedures for these extra classroom activities. And the challenges for these extra classroom activities are primarily because of turnover. You have turnover at student officers level, obviously, and then you have turnover sometimes at the faculty advisors level as well. So the key is to continue to stay every year to continue to educate and then provide training to the people who are the adults, the building personnel who are involved in supervising these student activity clubs to make sure that district policies and procedures are being followed in terms of documentation. And we've done our testing this year as well of the receipts and disbursements, and we didn't have any significant findings at all as for these receipts and disbursements. So overall, they are doing a good job in terms of the documentation, adhering to district policies and procedures. In terms of the clubs that do not have any activities or financial transactions anyway, forgive me, I do not recall specifically your district policies, but district policies can say that board policy can dictate that where a club is, let's say, a graduating class. Okay, the graduating seniors, they always have the first say in what to do with leftover balance. Okay, it's their money after all. If they could vote to give it to the next class or give it to student council or make a large donation to the school district if they should so choose to. But if that didn't happen, then management should look at board policy. Oftentimes it's to transfer the money out of into a student council or student government.
I guess my question is on the individual clubs. Is there any guidance on carrying a balance forward? So let's say I'm going to use the ski club as an example. So they carried a balance forward of, let's say, about $4,000, give or take. Is there any guidance on that? I assume is money that was left over either from fundraising or from trips where they didn't expend the full amount. Those students have already taken the trip. Is there any guidance on how much money that can be carried over from year to year? SGO is another one with a very large, has like a $50,000 balance.
No, there is no such guidance or requirement from the Commissioner of Education, actually. So again, that's something that a school board may, build that into your policy. You can do that, but really, ultimately, towards the end of a school year, it is up to members of the particular club to, first of all, they really should be aware of how much money they have in their own club, right? And that's the point of each club maintaining their own checkbook, so to speak, or ledger, I should say. They don't have their own checking accounts. And so that the membership themselves can decide what to do with the money. If they want to leave it for the next group of ski club members, that's their prerogative as well. But
We audit whether there are guidelines about those balances. In other words, when you do your audit, you compare the district policies or the club's procedures with those balances.
so we do look at the transactions, the cash receipts and cash disbursements. And again, as far as I know, I do not believe there are such requirements, at the board level or at the state level.
Yeah, we started about a half hour late, so we're still within our allotted block of time frame, which is moved. I want to make sure everyone has a chance to ask their questions. Let everyone go once, and then we can see where we are. Trustee Cashman?
Hi.
Hi.
Thanks again. I'm just trying to be super brief. Something that stood out to me on page 8, related to instruction, was a change from 2021 to 2022 of expenses related to instruction. We went, there was over a 14% decrease. And it represents over $15 million. In the descriptions on the subsequent page, it talks about, these are expenses related to, TRS, ERS, and different,
Yes,
employee benefit costs.
yes.
So, it's troubling, right? When we look at these fixed costs and relating
Right.
directly to the instruction, especially with the rising cost of healthcare. I'm interested in your input as to, given the constraints of the reserves, what are the guidances to help manage this?
So the first, remember I mentioned about 2 sets of financial statements being presented here. The consolidated one where the commercial worldview is being applied. And I talked about long-term liabilities, including other post-employment benefits. What I didn't talk about, and I probably should have, is that you're also required to pick up a share of the TRS, the Teacher Retirement System, and the Employee Retirement System. The 2 retirement systems share of their net pension liabilities or net pension assets. Now, those are numbers that their actuaries calculated annually based on their own fiscal year, and where they would measure their available assets versus the total calculated pension liabilities, and see whether or not the retirement systems have more assets than their total liabilities or they have less. Okay? If they have more liabilities than they do have assets, then they have a net pension liability. And you, as a participating employer, like all other local governments in New York State, would have to recognize your proportionate share of the net pension liability on that consolidated balance sheet I was talking about earlier. Okay. And similarly, if they have more assets than they do total pension liabilities, then they have what's called a net pension asset, and you get to pick up your share of that net pension asset. So as it happened for your reporting year of June 30, 2022, the 2 retirement systems net pension amounts changed from a liability a year ago to a net pension asset for your reporting year. As a result, there's a shift of, if you look at page 19 of the financial statements, near the top under the assets, your district actually is reporting $54.6 million of net pension asset. Okay? And that's mostly from the teachers' retirement system. Okay. That's a huge number. $54.6 million. It's reported there. Okay. And it's a shift from a year ago where you had a net pension liabilities of about $7 million. So that's a shift, okay, of $62 million. So basically, based on these changes in the numbers, the calculations worked out to become a pension expense credit. So as a result, even though your overall total expenditures for general fund, as I talked about earlier, even though those expenditures went up, because of these accounting adjustments that are required to account for the change in the pension reporting, it actually ended up, and by the way, even though these are considered employee benefits, in this consolidated set of financial statements, local governments and school districts are required to allocate all these employee benefits to the various functions, instruction being one of them. And the result is the skew that you're seeing, that it looked like instructional expenses went up dramatically. And that's why the explanation was given, on page 9, as we were trying to describe. And that's one of the challenges really of governmental accounting financial statements is the confusion that these elements could cause.
Call that confusing?
That's what I was talking about before when I prefaced my statement with as of June 30th, 2021, TRS reported that it was 113% funded.
That's what I'm
That's what
talking.
I'm talking about.
Okay, all
So
right.
then and then you have an asset, right? But it also means your contribution, you're not going to get hit with a heavy contribution. The idea behind having a TRS and an ERS reserve is when you have a scenario like 2008, right? And the stock market went down dramatically, right? And then you had to the district had to come up with monies to make the TRS and the ERS whole because we're required to do that.
Right.
When you have 113% funded rate, you're not going to get hit with that like you were in other years. That was why I prefaced that we have this in reserve.
Okay.
You have 113% funding, so you're not going to get a liability number, at least.
I did not realize you
year.
were referring to the TRS, the entire system itself. You
I
are,
was.
you are correct. Also another complexity to this is that even though you're reporting fiscal year June 30, 2022, you are allowed by governmental accounting rule to use the TRS's in report from a year ago. So the information was from their June 30, 2021 audit report, and for good reasons too, because their audit report is not done and out until October, November of after the close of the fiscal year. So there's no way that school districts would have been able to obtain that information. And so the information being reported here from the TRS is from 1 year before. Okay, but you're absolutely correct. Stock market affect their investments performance and affects their net assets. And what we're seeing in this particular fiscal calendar year right now, although in recent days it's rebounded somewhat, the stock market was performing very poorly. So that could translate into 2 years down the road.
Hold on, a reverse. All
Correct.
pensions or actual variations are a year behind, not just TRS. For every fund that I sit on, that's just the way they're done.
That's
because
correct.
You have to have the completion of the assets in order to do the actuary valuation.
But you're
But
absolutely
you're not-
correct.
But 2020, 2020, the stock market rebounded at the end of the year. So you really had a flat return. You didn't have the 12% return you might have had the year before. So 2021's valuation is 113%. We don't know what 2022 is going to look like because we could still have a rebound at the end of the year. So even predicting 2 years down the line right now is, a little
Right.
speculative.
Exactly. Nobody has a crystal ball, and that's why it's important to have these reserved. You're absolutely right about that point.
Bring this full circle.
Sure.
In the same way that these are accounting book values, the same way we don't have to write a check for the $135 million liability, no one should be confused that we have $53 million sitting as an asset. that we can
That's
tap
correct.
into.
Even though it's called an asset, I don't really know how it really is an asset to you because you cannot, Jamie cannot call up the TRS tomorrow and say, hey, give us our state aid and, take your $4 million contribution out of this $50 million asset.
I mean, it's an indicator of where you are at a snapshot in time, but
Right.
but not an actual dollars and cents account. Lisa, did that
And that it's somewhere else in the balance sheet and I just have to meet with Jamie and find it.
I'm sorry.
The $15 million, the adjustment that she was talking about from 1 year, which was a result of the actuarial study and the TRS,
Right.
Where it is and where we can, is it something that we can spend or that we spend?
So you're talking about a change in terms of the expenses, the seemingly lower expenditures, right? Expenses, I should say. It's not. The answer is no. You didn't. The general fund, what we went over extensively earlier. The fund balance is where, your revenues minus expenditures equals your end result. Your net profit for the year was $16,000. Okay, so that table you're referring to is a comparison of this fiscal year's total expenses, including the pension adjustments, long-term liability, including the other post-employment benefit adjustments, because that's also an actuarial calculation. This year versus last year's calculated amounts. So it's not like the district generated a savings of $15 million. There was no such thing. You could say that on the budget side, because you only spend 98.6% of your budget, and therefore you have some savings from the spending side of the budget, but the actual result is the general fund's operating surplus or loss in the given fiscal year.
General fund is, think of general fund as a cash basis. The general fund is a cash basis. Your financial statements include things that are not tangible. You look at the capital improvements, right? You have depreciation on your buildings, right? It's not a real number that you're losing money because your buildings depreciate. And that depreciation this year was offset by the improvements that we did, the capital improvements. So you're talking financial numbers, you're not talking cash. So the 15 million is not a cash asset. Just so if you want to think about cash, stick to the general ledger. The other is more long-term financial planning and a financial accounting principles that we're required to do by law.
I mean, did you? Yeah.
I did want to, if you look at page 57 of the report. There is a category called instruction. And in that category, it's what we spent on instruction, actually spent taking out all of the nuances with the TRS and ERS and those adjustments. If you go back to that the financial statement of last year, it's roughly about the same amount. We didn't spend less. It's adjusted slightly, but that's where you would get the actual amount spent on instruction from year to year.
Don't we have to take into account when we're looking at instruction, right? We had, because of the pandemic, extra classrooms, extra teachers, extra aides, extra monitors. So all of that increased the cost of instruction in 2021 that it's not that we're spending less in 22, 23. It's just that we're structured differently because the class sizes have changed and we don't have as many teachers. So, I mean, I think when you're looking at that year in particular, 2021, I think it's a skewed number.
Can I ask just one very quick question?
Sure.
Mary Ann brought up the FEMA money that can go into the fund and be spent. That wouldn't be subject to the tax cap. It wouldn't be included in the tax cap calculation, would it? So it would seem kind of counterintuitive that the government would give you money and then make it subject to the tax cap. For instance, when businesses got PPP money, they didn't have to, that wasn't reported as income.
No, the FEMA, you're correct. The FEMA would come into account when we look at the fund balance and that we had that extra revenue in a year, but the tax cap specifically looks at the tax levy. And then there are some calculations of things that are taken out of that in arriving at what your tax cap.
So you're not getting penalized
for receiving that, no.
It is extra revenue that has to be either put toward reserve or used to offset taxes and return to the taxpayer via that mechanism if you to remain within that 4% of the unassigned.
Right.
That was my point.
And that's a reimbursement, by the way.
Reimbursement. That is true also.
Right. Yeah, that money we spent, that's part of the 2.7 million that we moved from 2020.
Yeah, the 2.7 up to 2.9. Yes.
Part of it, not all of it's recoverable, but
Yes.
part of it is.
Right. But I like the inherent optimism in your question about getting more of it, Mary
I just know that the paperwork that Olivia and Jamie did is gonna be so good that we're gonna get the money back.
I'm on board. I'm on board. The reimbursement is similar, for example, to what we talked about with St. Christopher's, where it's comes in as a revenue, but really it's an offset to expenses. Just as we're moving this way, I have some quick ones. I'm going to ask them quickly, and hopefully we'll just get, straightforward answers. You seem very comfortable with the 98.6, not just that that's the perfect temperature, isn't that what we're supposed to be?
No,
Uh,
no.
But I, generally we use, I think, 1.5% to 2% as sort of the informal benchmark of where we've been historically. Just want to be clear, you're not worried that's too close to the bone at the 1.4 difference. You seem okay with it, but
No, I think anytime, no, I think you're fine. And if you're 99.6%,
okay.
I might say,
Okay, I mean, we're obviously constrained by the tax cap, only so much you can
that's
do, but
correct.
you
Right.
don't want to bite off more than you can chew and then find that
Right.
you can't.
It's a fine balancing act, obviously, because you also, as you have been responsible, you're responsible to your community. And, I think that's a decent place. And anytime you, from reading Comptroller's audit reports, anytime a school district spend 97% or more of their budget,
Mhm.
they think you've done a reasonably good job.
There certainly are unnamed districts on the island that have been below 90 that Mr. DiNapoli has not been enamored with.
Every now and then.
Yeah, exactly. Question about the TANs. So being in the people business, the vast majority of our cash flow is toward employees. And that of course has no room for anything other than biweekly payments. Are there other areas or techniques that districts have employed to manage cash flow in the way that private industry does to be able to smooth out those lulls? Because the way that we receive revenue is spiky. It's not smooth. I
Right.
believe March is always a big lull. That's a bad month for cash flow, and that's we need that borrowing. And in the past, recent past, with the cost of borrowing being so low, it was less of a concern. But interest rates don't seem to be going anywhere for a while.
Right.
So that
Going
becomes,
up.
they're going, if anywhere. And so that becomes more of a concern these times. It's not just,
Absolutely.
easy borrowing for cash flow.
Absolutely.
Are there other remedies for cash flow that I don't need you to tell me right now, but that maybe we can work with you on to try to manage that, to reduce the necessity of that?
Unfortunately, there are not that many options available to school districts. And, one option that your district previously had tried, with limited success is because by law, you can borrow instead of going out and issue a TAN, you can borrow from your own reserve funds. Because right now, legally speaking, as you project your cash flows for borrowing purposes, you cannot include your restricted reserves fund balance or cash balance in those projections. And what if you have $10 million in more than $10 million in reserves? Forget about, except for the capital reserve, that you cannot touch. But other reserve, what if you're able to borrow from it, or at least count it towards your cash flows, so that you don't have to borrow as much in TANs, in tax anticipation notes. Right now, state law does not allow you to do that. Only, as I mentioned earlier, only very limited reserves have provisions in the law that would allow school districts to invest the funds in, and you can invest your funds in those couple of reserves in another municipality's borrowing, including your own. So you can borrow from yourself and then pay the interest to the reserves.
I think we're going to be approving another asset class today. And the unassigned 4% really is just there for you. That's again just an accounting number at the end. That cash is available to you. I assume there are numbers below which you would not want it to go as well.
Yeah, I think 4% is, some districts would even argue that that's too low. And certainly I think you want to maximize it at 4%. Sometimes you can go down to 3%, 3.5%, but that would start to be a little bit uncomfortable because that means you're actually generating recurring operating deficits, and sooner or later, the fund balance and reserves could run out and will run out, and then you're faced with the difficult choice of, especially with tax cap law in place, of having to cut, programs.
I just want to also recognize this is a very strong report. Thank you. Us getting back to the 4% in and of itself has been a bugaboo that I know that both the community and this board and our auditors have noted for years, and that, as you note, is corrected, returned to where it was supposed to be. The unexpended capital reserve balances, you noted, are back where they're supposed to be. The school meals program, without going into it, we know that without kids being here and buying the extra goodies, we've seen a strain, but now we're back to buying extra things. So that should be returning to full strength, as our kids are. And so those are all things I thought were worth noting. We're tight on time. I want to give other trustees who haven't spoken a chance. No? Okay. Everyone good?
All right. Thank you. Thank you for your time and attention.
Much
Thank you, Alan.
appreciated. Thank you. Take care. Okay, we have a
Sorry
regular,
about a spotlight.
no,
Thank you, Ellen.
we have a regular meeting. Does anyone need? Okay, we'll do very quickly. And also, yeah, I was gonna say, and I see, we need one of those like poker playing visors for, Lisa. All right, thank you. Thanks to the public that's here. I don't know if you're initially here for the audit committee, but, hope you found it. Pardon me? Yes, Roger and Andrew are welcome to stay, but from the audience. Thank you. I think we're gonna move it to December 15th because there was a delay, but they'll talk about that. I hope that works. Yeah, Roger? Sorry, I think we're gonna, the internal and claims are gonna move from the 1st to the 15th. It'll still be a Thursday. December.
That's good. Take advantage of it.
What should you say? Lisa moved.
Oh, she moved. I'm like,
Not too far.
I have a little ready up.
Okay, welcome. It is now 8:40. Wow. And we are calling this meeting officially to order. Please note the board met in executive session to discuss matters regarding the employment of particular person or persons, collective negotiations pursuant to the Taylor Law and proposed pending or current litigation. I would invite folks to please rise as we recite the Pledge of Allegiance. I pledge allegiance to the flag
of the United States of America, to the republic for which it stands, one nation.
Thank you. I will ask if there's any changes to the minutes from October 27th. And there being no changes, we will consider them approved. And we will now move on to action 5, which is acceptance of the claims audit report for September of 2022. Is there a motion? A second. Thank you. And any questions or comments?
Quick comment, just, following on that nice external audit report that I don't have it in front of me. You're moving so fast, Dave, but there was only one exception, I think, of $36.
I have the note. It was 0.1%.
Yeah.
$36 out of $6.25 million.
Yeah. So kudos to Jamie and the staff
Yeah.
at the business office again.
I don't know if you're like being humble or if you're thinking, darn, I wish it was zero. But one out of
Happy with that.
1 out of 444 checks. So yes, that's impressive. I'm glad you brought it up, Andrea. But as you can see, I was I'm sorry, everyone's moved around. I don't know. Did I just call you Andrea? As folks may have realized, we are short two trustees tonight, but we do have more than a quorum, and we're soldiering through. All in favor of acceptance of this claims report? Aye. Thank you. Action 6, which is a resolution, as I referred to earlier, regarding NICLAS program. Is there a motion? And a second?
Second.
Thank you. I believe there was just a brief request to.
Yeah, I just wanted to highlight this a little bit, particularly since we've been talking a little about interest rates and stuff that NICLAS, I haven't had a minute to catch up. So sorry. I don't have my notes in front of me. Jamie, and maybe I'll toss it to you because I just thought, the 2-line elevator speech about why this is such a great, a really good opportunity for us to be taking advantage of particularly in this season of inflation.
Okay, thank you, Trustee Mosca. I know we had spoken earlier about cash flow and the problems with cash flow and how we overcome those. One of the ways to do that is obviously to increase our interest and our revenues. New York Class is very nice because the interest rates that they're offering are just that of below a CD in many cases, and yet we still have full access to those funds so that we can invest it, and if we need it, take it back the same day, as opposed to a CD where you would be locking it up for a set period of time. And I know as the CD rates as the other interest rates on borrowing have risen, the interest rates on deposits have risen as well. And New York Class moves pretty much with those same CDs. So if a CD is now just over 3%, they're just under at 2.9%, I think was the most recent that I heard.
It's an investment pool, right? A government investment pool. So we're in there with, other municipalities putting all this money together.
That is correct.
And thereby earning higher interest rates.
I know, I believe current participants now, several counties in New York State, villages, fire districts, and a number of school districts are all part of New York Class.
In accordance with the law, not low risk, zero risk.
Correct. They collateralize their deposits the same way our own banks would.
Other questions? All in favor? Aye. Thank you. We'll now turn to Dr. Zublionis. Haven't heard from you yet.
Good evening, everyone, and happy Veterans Day to our veterans in the community and to everyone. Thank you for your service. We'll be off tomorrow in observance of Veterans Day. And we've had a very busy few weeks, and believe it or not, we're getting close to Thanksgiving, and which means our fall dramatic performance, which this year is Inherit the Wind, which will take place next Friday, November 18th at 7:30 p.m. and November 19th at 2 p.m. and 7:30 p.m. So we're excited for the work of our maskers and for everything that we're going to see them do. And then soon we'll have our middle school maskers have their performances. We've had some great athletics accomplishments over the last few weeks. I will say, just kind of going backwards in time, some of us were at the football game this evening, and there was a 14-14 tie with a few seconds left, and a field goal from North Shore broke that tie. So the Vikings will be in the Nassau County Championship next Friday. We're excited about that. We're also excited about on Saturday, we'll have 4 runners competing in the state cross country championships. And they are Robbie Levy, Bella Martocci, Sophia Marchioli, and Sam Sturge. And also, as we've been communicating, the North Shore boys and girls varsity cross country teams both won their class in the Nassau County Championship. So congratulations to all our runners. We also want to recognize our volleyball team, who was in the Nassau County final championship last evening in Farmingdale. They were not victorious, but they went so far, and we are so proud of them. And it was a very hard fought series of sets. It really was amazing to see. And I want to just give a shout out to Coach Iacovelli, also Coach Blyweiss, who is a North Shore alumni, who drives from the city every day to practice with our team. Such a great model, and really very proud of the coaches, Coach O'Brien as well, and the team. Exciting news on the middle school front, middle school musicians, the New York State Band Directors Association, Middle School Honor Band, recognized several North Shore students. 6 students have been accepted into the band, and 3 alternates have been accepted. The statewide total of students is 109, so that means 5 to 9% of the statewide band are North Shore middle school students. So very, very excited for those students. And we look forward to recognizing all of these students shortly at upcoming board meetings and in other ways. I did want to mention that we've been having our listening sessions to get feedback on the strategic plan and the North Shore journey. We've had good attendance. We'd like to see more attendance given, the difficulty of some of the nights. And we know we added these to the school calendar. They weren't on the calendar to begin the year. So our next session will be on interest-based electives and elective opportunities, extracurricular opportunities rather, November 28th at 7 p.m. in the middle school library, and also December 1st at 10 a.m. in central office. I will say that having smaller groups has fostered a really nice conversation. So we will have a winter cycle of these meetings, a spring cycle, as well as similar meetings with students and faculty. We'll also have another coffee with Chris on November 29th at 7 p.m. So that week after Thanksgiving, we're going to have a lot of opportunities to speak, and we'll also have a board meeting that week. Just a reminder that we will have an early dismissal drill, our annual early dismissal drill on Tuesday the 22nd. And we, in typical North Shore fashion, we do not have school on Wednesday before Thanksgiving. So we'll be sending out your principals, and I will also be sending out communication about that. There have been a lot of questions in the community about the universal pre-K funds that the district received for the first time in this budget year from the state aid run. And we've been struggling, as I've mentioned in other meetings, to find participating providers because while we're grateful for the funding downstate here, especially in Nassau County, pre-K's tuition is higher than the state allotment. So we're continuing to look for partners, but also really focusing in on partners that could come into our schools and accept that rate. So we'll have more formal recommendations for the board and share that publicly as we get into December. And those are all of our updates that I have for this evening. Thank you.
Thanks, Dr. Z. Yeah, I was at some of those games with you. It was really nice to see faculty and our administration, as far as SUNY Farmingdale and Hofstra. Hofstra was quite a rush to get back here tonight, but we're all here. I think it's also worth noting that in addition to the great athletes, our band was fantastic. Our cheerleaders were fantastic. Our dance team was there. It was really a highlight of all of our students. All our students, but so many different things that our students do. highlight their activities. So it was, it's been a really nice week, and I'm looking forward to more of it. And cross country is a little harder to watch, but equally amazing. All right, we will now move on to, normally I would say a report from the SGO, but our two representatives are not here tonight unless I'm missing someone. I know one of them, I believe, was the kicker who won the game tonight. So I'm not going to say which one, but that's exciting. We'll now move on to our regular business, and I will invite Dr. Zublionis to lead us in a discussion of budget priorities and revenue challenges.
So we'll have another Pappas Zublionis tag team presentation, and trustees, please feel free to remain or to move to the seats. But I do have copies of the updated presentation that I'll hand to you now. So Jamie and I are going to transition down there. Bring that screen down. Good evening, everyone from down here. This is the time of year where Mr. Pappas, Dr. Smythe, and I meet with every administrator in the district, our facilities director, our transportation director, our food service director, and really go through the budget line by line for those specific areas. As you can imagine, with everything we've been talking about this year, we're looking at things a little differently, and our processes have changed in accordance with that need to take a more ground-based view of our expenses and to look at ways in which we can find efficiencies, with the golden rule of this all being, will the children notice? Of course, we don't want them to notice or being impacted as little as possible. So the big picture for us is always to balance the community, our programs, and the budget is what accomplishes that. And if we were to personify this slide, it would be the residents, all the residents, the taxpayers, our students, and the district makes that recommendation to the Board of Education on how best to do that. So as I was mentioning, we have several newer concepts, I think, that we're bringing in. Some not totally new, but that we're stressing more this year than in years past, given the revenue challenges that we'll review again in this presentation. Something Mr. Pappas and I call a new spirit of efficiency and frugality. Can less be more, looking at areas where actually being more efficient can help us operate better. Looking at opportunity costs, where there are redundancies, and how redundancies in spending or even in programming can actually prevent us from offering other programs that we might not be offering. Non-instructional versus instructional aspects of the budget, taking a good hard look first at those non-instructional, non-program parts of the budget that would have zero impact on students or minimal impact on students. Again, so the students do not notice. Again, our goal is to, when we think about students walking through the buildings in any budget year, we want them to have a better experience in the following year, a safer experience that helps them to accelerate their growth and to be more engaged. This year, and this is a difference from previous years, we're really making a commitment to halting any kind of additions, personnel additions to the budget, and really looking at what we do have and using it more wisely. Where additions do need to be made for program-based services for students, we're looking at how we can find efficiencies to meet those needs and find efficiencies in other areas. And of course, more than ever, we're looking at our impact on residents because of the historical shift in the tax base in North Shore and the new, much more profound impact on Class 1 or homeowners. As you've seen in some of the district's communications from Mr. Pappas and I, and some of our presentations and some of the videos, we've tried to graphically represent this tax shift. in North Shore. And so the shift from class 3, which is the utilities, as that class 3 has paid less of the tax in North Shore, the homeowners have paid more. And you can see it here. The red is the homeowner share. 54.5% in 2001 has shifted now in the current year we're into 83.4%. So even if the budget that we have now is the same as in 2001, which it clearly isn't, the tax burden on class 1 would go up dramatically just from that base shift on its own. One thing that I've talked to some residents about and some parents is, as we've made the videos about the LIPA agreement with Nassau County and the impact on North Shore, is, the district's role now in curbing some expenses and in keeping the levy low. And I just want to preface everything we say tonight, and we did mention it in the videos, is that we do understand that role. The communications that we've had have been really an attempt to demystify, to clarify, and to break down into its simplest parts everything that's happening and that has happened over the past 15 or 20 years in North Shore financially and with the tax base. But now is the time where we are going to start talking about our role in trying to limit expenses and to keep that tax levy as low as we can, and play that balancing act between our residents and our community. We're really focusing this year more than ever on zero-based budgeting. Zero-based budgeting is a method of budgeting in which all expenses must be justified for the new budget year. It's the opposite of just rolling over the budget and adding on a percentage. What we've said to our administrators this year is, imagine we're building a school from scratch and we have the constraints that we're talking about. And every administrator has been given a task to look at their program, look at their department through several different analysis points, to look at enrollment, to look at the programs that are offered, to look at the programs they want to offer but might not be able to because of redundancies. So again, an opportunity not just to cut costs, but to create and look for efficiencies that can actually help us to also offer new programs if we do it the right way. So we do see it as a challenging time, but also an opportunity. Last year, the district, because of the way the LIPA assessment was structured with Nassau County, that LIPA agreement, we actually needed to take what was previously tax revenue from LIPA, and we need to take it out of our tax levy. So on August 3rd, the board did lower the tax levy by almost 7% to $85,925,546.11. And we needed to do that. But one thing that we did make clear, and we tried to communicate in those videos that we've been in the district communications, is that the tax levy increase is not the same as the increase in your personal property taxes. And this is the case in all Nassau County districts for a couple different reasons. We hope in 2025 that it will be less of the case, that when you see the tax bill and the tax levy, you'll be able to say, okay, the tax levy is going up by 1% for the school district, so therefore my school district taxes on my home should go up by 1%. Right now, that's not the case. And we've looked at many different districts, and that's because at the same time that the school tax levy is changing, the county's assessment of each individual home is changing by very varied amounts, even by houses that are right next to each other at the same approximate assessed value in the beginning. They are changing randomly and wildly, and that's just the nature of how the reassessment system is working in Nassau County. It should be complete by 2025. The other piece is the change in the adjusted base proportions that we've been talking about. Class 1 homeowners have been taking on more of the share, more of a piece of that tax pie. We do hope that too, after what we've just gone through, that will start to slow down and we'll have more predictability with that. And so the message is, there is variation, and it is hard to predict the expected income on on homes. Although we feel like with some of the resources we found through Nassau County, the land records viewer really being the most helpful, we can educate the public as we get closer in specific ways and through interactive forums. But overall, as we get through the next couple of years in 2025 in particular, we should have more predictability about how each individual home will be impacted. By lowering the tax levy, however, the compounding effect is that we will actually receive less tax revenue. Mr. Pappas, would you want to speak about this for a second?
As shown in the chart, when we lowered the tax levy from 94 million to 85, from 644,364 to the 85,925,546, it actually lowers our base in by which a 2% tax cap would be applied to. So if we did nothing at all, applying that same 2% tax cap to our new tax levy, it draws about $174,000 less in taxes than we would have under the old the originally budgeted tax levy. And that kind of compounds each year because that base tax levy can only go up by that 2%. This is here because it's in addition to that loss of revenue or that change in our tax levy that resulted from the Nassau County and LIPA settlement. This $174,000 is on top of that, making the number for next year that much larger in terms of what we need to address in the budget and going forward.
Now, the good news on that side is that we actually have lowered the tax levy. So while the base proportion that the county determines that homeowners pay went up to just over 83%, the actual tax levy went down. Again, that creates a shift to class one, but it does help us hopefully to set the stage for easing the burden on taxpayers going forward. As we've been talking about, as we've been communicating, over the next, in this current year and then over the next 4 years, we will be receiving less in those direct assessments from LIPA. This slide represents the reduction in revenue that we'll receive from 1 year versus the previous year. Another way to look at that is the annual revenue loss if LIPA had not made this deal with Nassau County. And you look at that number through 2028, it's over $38 million. Now, as we curb expenses and find savings or find new sources of revenue or permanent aid, that's recurring as well. So we want to kind of blunt this impact and readjust our budget going forward. But just to look at it graphically, with what we know, we would lose over 38 million versus if the LIPA deal had not happened. And there is the possibility that LIPA will not continue those payments after 2027, which would create even more financial burden on the district. Luckily, that does give us time. That gives us several years to find adjustment. I've showed this model before in some of our previous presentations. It's a financial model that Mr. Pappas and I have worked out to show, and it does look complicated when you look at the numbers, but if you look at that blue column, what we are looking at is the adjusted revenue loss from LIPA, and that is impacted by the year before, any program cuts or new revenues that we find. That's what we call permanent solutions. Versus the green column, which is the use of aid in a given year, whether that's the LIPA aid or bullet aid, grant aid that we get from New York State. Those are 1 year supports that we have. What the goal is to cut down on the adjusted revenue loss so that we come to an evening out point. So this is one way in which we can do that. If we can make certain budget cuts, and use the LIPA aid and other grants in a given year, it helps us to regularize so that we don't have to make, multiple millions of dollars worth of cuts in any given year. So our goal is to build a glide path within the glide path with other aids and supports that we have, so that we have a predictable amount that we're dealing with in each year. Again, this is just isolating the LIPA situation for the next 4 years. You know, one thing that we've talked about in our meetings and our communications is the fact that you know, the tax levy really isn't built for this. The tax levy is built for year-to-year salary increases, other overhead expenses like health insurance for our employees, and so we're going to have to look. We're really the pure math of it is that we have to look for other solutions beyond the tax levy to solve the LIPA challenge. And there are some of those other revenue costs, rising energy costs. Certainly, we mentioned interest in our audit discussion. That works for us with some of the work that Mr. Pappas is doing. In other areas, it works against us and makes the cost of any business, including the education business, more expensive. And then inflation, certainly in that same vein, and unfunded mandates from New York State. One thing that we've been working on is our grant funded programs, and we did receive ARPA and Carissa grants, as they're known, during the COVID era from New York State, and that's helped us with our summer programs and with our after school and additional academic support programs for all of our students, for our E&L students. And that money is coming to a close. It was a set amount. We have been speaking with state representatives who help us to transition from that funding. We had a great conversation yesterday with a very talented team from New York State. And we were very impressed at how they had been watching our communications, watching the videos. They actually complimented the quality of the communication and asked us more about what we were going through. So we were trying to plant the seed of hopefully, you know, working with the state to get more support. They themselves were not in a position to promise anything or help us, but we definitely see the possibility of an inroad to work with the state and with the state education department to help us. But they also had very good concrete ideas on how we can continue some of those programs without the COVID aid continuing. Beyond the challenges, we want to think about priorities, and in a few minutes we'll hear from our board on those priorities. Our goal as an administration is to maintain our arts, our athletics, our extracurriculars, certainly the academic quality and choice that our students have always enjoyed at North Shore. Student choice within the program offerings, but also their own choice and their ability to choose. That sounds redundant, but basically, you know, the way the schedule is built and the way that we distribute personnel allows students to have many choices. And of course, student supports for all of our students, but certainly our students with disabilities and our English language learners. We also want to improve facilities, arts and athletics facilities. We've talked a lot about the dance, a room for our dance program. We've talked a lot about the turf and other fields and resources. We want to improve administrative systems and processes. And actually, the fiscal challenges, I think, create a great opportunity to take a fresh look at how we operate with personnel, with our administrative team, and to find efficiencies and improve. With Carol, Jamie, and I coming in new, we really see this as a great way to press the reset button on the way we do things internally. Again, options for students and the burden on residents, of course. Again, that balancing act. And finally, we just want to talk about very briefly about some of the things we're already doing to work towards all of these goals and to face these challenges. First, as directed by the board, we are working to underspend this current budget because of the timing of the LIPA deal and that news really coming at the very end of the school year. We want to underspend the budget to create savings that can be used towards the next year's tax levy. We are conducting program audits, as I mentioned earlier. All of our administrators are looking at their programs and looking at redundancies and opportunities to reduce cost and perhaps even offer new programs. And just like we're actually having 2 sets of meetings this year. We have our budget meetings with Mr. Pappas, Dr. Smythe, and I that we've had every year. We're also going to have program meetings with each administrator and each principal to look at the results of these analysis and have really rich discussions that we'll report back to the board on. thoroughly examining all non-instructional personnel related items in the current budget to see where we can find savings for next year. And that is a not very scientific process, but it's me, Mr. Pappas, and Dr. Smythe going through the detailed budget that lists every single expense that we're operating in this current year with a highlighter, with pen and paper, and really looking, doing the hard work and looking at that through multiple cycles to see what we can find. Seeking out avenues for maintaining and expanding annual grants and state aid. This is very important, and we're beginning to do that. We just, now know who some of our elected representatives are, the ones that aren't incumbent, that were newly elected and or reelected, and that gives us now an opportunity to work with our Legislative Action Committee and others to get that support for the district. One thing we've talked a lot about is state aid, and that's something we want to explore. That's a newer concept of how we can work with the state government to support us with more permanent aid that is sustainable instead of having to fight for it every year. And another concept that we've started working on this year and we want to expand is that notion of tuition-based programs in which students from other districts pay tuition to come to North Shore in a way that creates opportunities for our students and certainly doesn't create any difficulties or lack of resources for our students. And with that, we're going to move back and hear from our board and their take on the priorities and challenges. Thank you.
Thanks, Dr. Z. That was great. It was a good springboard for this conversation. Thank you too, Jim.
I should have mentioned that our upcoming presentations in December will not be me speaking, so they're going to be much more exciting. We're going to be talking about achievement, and you're going to hear from different voices. So you got a break from Dr. Z for a while.
Officially exciting. So no need for that. But I will turn it over to my fellow trustees. Whoever would like to jump in, I'm not even going to look. Just grab your mic and go.
Go.
Okay, go for it. Thank you.
Since I'm sitting over here, I have a newfound, I want to go first. I don't know. Thank you so much, Dr. Z and Jamie. That was so comprehensive, and I really appreciate all the work that went into it. I just so appreciate the budget process. I think, it begins with laying out our priorities here and now, and until we as a community vote on that budget in May, the conversations continue and evolve. My priorities are always going to be about not only maintaining this excellent district that we're a part of, but also moving it forward and improving upon it, which I'm just going to repeat a bunch of stuff that you said, Dr. Z, because I agree with so much of it. And the fact that we were open during the pandemic and made teaching such a priority shows in our test scores. We just received the New York State assessment scores, and the scores were phenomenal. We did significantly higher than the state and Long Island averages. Our math scores were, at the top. We exceeded almost every one of our neighboring or similar districts, and ELA was excellent too. So I really feel this is a testament to our program, to our teachers and our administrators. And, this is what we have to maintain. The district worked very hard last year on engagement with the community. We formed the budget advisory committee. We had those budget boot camps, and I know we are going to make sure to continue that engagement in any possible way so the community understands what the budgeting process looks like and what this investment in our community looks like. Because of the magnitude of the loss of revenue from LIPA and the fact that so much of our costs are fixed and tied up in salaries and benefits, we have to do an even better job of making sure the students do not notice. I love that phrase. The budget process is an incredible amount of work, starting from a zero budget and figuring out what our needs are. And I think we need to be especially clear this year in the budget narratives for each department head. We need to ensure that increases and decreases are clearly laid out, that we have a good plan for the next 3 to 5 years about how we are going to maintain not only our program, but our infrastructure and our inventory, our library books, our uniforms, our computers, our instruments. We need to hear from teachers about what they need to ensure our exemplary program is not affected by the effects of LIFA. Where can we find savings in a way that doesn't directly impact our students? You talked about non-instructional. And engagement with the community is essential, but I also just don't want to forget about the priorities of our teachers as well. Also thinking about infrastructure, I don't want us to be penny wise and dollar foolish. Sometimes when money is tight, we still have to spend money to save money. So we can't let necessities in our infrastructure and equipment go unfunded so that things may become unusable in the future, and then we have to spend more to fix them later. So I do think that one of our priorities should be a capital reserve so that we can maintain our infrastructure needs. And I think all of the priorities that you laid out in your presentation, maintaining arts, athletics, extracurriculars, academic quality and choice, student supports. I'm just going to repeat them because they are so important. I agree revenue generating programs that benefit not only our students, but those from all over New York may be another way to offset the effects of LIFA. Our Twice Exceptional program could be a great example of that. What else can we do, especially in the realm of special education? Wouldn't it be nice if we were known as, the leaders in special education programs? And there were also a couple of positive pandemic takeaways that I hope we can continue to utilize. I'd love to see the continuation and enhancement of outdoor learning. I was really pleased to see a couple of opportunities focused on outdoor learning in the list of PD offerings from Tuesday for the teachers. This could be an area where there may be grants available. This to me is an enhancement and improvement in how we educate our students, keep them mentally healthy and engaged, and something that we can do at low cost or maybe even at no cost if possible. And I'd love to make sure we don't lose our focus on maintaining and improving indoor air quality and ventilation. We invested in something that will keep our students and staff healthy, and I want to make sure we don't forget about that. And even the little things like still using the HEPA filters where the unit vents might not be up to par, or wherever they may be helpful. Another important thing I don't want to forget about is mental health staff. We keep reading about the increases in depression and anxiety in children. So I do think it's important to maintain a robust mental health department in each school. And we talk a lot about project-based experiential learning. So anywhere we can enhance that, like field trips, should also be a priority. Cutting programs does affect students. They will notice those types of cuts. So where can we find efficiencies that don't affect our priorities, our commitment to SVOs and the North Shore journey, our class sizes and our choice in offerings, so that every student finds their voice and passion? We have an excellent program, and we need to maintain the whole educational program so that we continue to provide a world-class education to our students. Thank you.
So thank you so much. I'm not going to say it's a seat change, but that was a very, very well presented array of priorities. Who else would like to go?
Fine.
It's got to be someone. Go
If
for it.
everyone is being shy all of a sudden. Thank you for the presentation. We've talked a lot about what students would notice, right? So this is not a topic of discussion tonight in particular, but we have looked at administrations where we can get efficiency in administration. And when you're talking about redundancies and course efficiencies, I think you're probably looking more at the high school, maybe the middle school. And I think we can sort of look at those AP, IB dual enrollment courses as where there may be some redundancies. And I really think that we're going to have to take a hard look at the IB curriculum again, simply because of the number of students who participate and the requirements for running some classes that have incredibly low enrollment. The scores on the IB program have never been spectacular. And the co-seating, I think, has been detrimental to our AP scores, which actually tend to be higher than our IB scores. So I think we can look at that. And the dual enrollment opportunities as a basis to offset any areas where we just don't have the enrollment to run a class, but we don't want to deprive a student of the opportunity. And I think when we're talking about these programs, I think we have to, make clear to our parents and our students that, it's not necessarily about credits, because not every place will take the credits for the dual enrollment, or will every place take the credits for AP or IB, right? So it's what program fits the students. I would hope that we would continue to participate in BOCES. I wish that since it's part of our budget, we have to pay part of their administrative costs as part of our budget, as well as the per student costs, that we would do a better job at presenting those opportunities and encouraging students to participate in the BOCES program, which offer unique opportunities. And I think, unfortunately, in many districts, there's a stigma attached to BOCES, which I would hope that we try and stigmatize that, right? I mean, being able to do beautiful woodwork is just as much of a skill as to be able to perform surgery, right? So there are lots of opportunities for students who maybe think differently, have different skill sets, to explore future career opportunities, which are, quite lucrative. And in this environment would be something that we really should be emphasizing more than we do. And that's not going to be savings for us, because it actually costs more to send students to BOCES than to keep in the regular classes. But I think that has to be, part of the bigger picture. Our infrastructure, we talked about the dance program. We've talked about the athletic turf field. There, I'm sure, where there's an endless laundry list of infrastructure needs, future planning. I think we have to look at that carefully in terms of our budget priorities. You may have to build some of that into the budget if we don't have a capital reserve or other or bonds to do it, which I think in this environment where there's a bigger chunk of the pie being paid by the taxpayers will be more difficult to pass. So I think we have to look at how are we going to plan in the future, building in things like, a dance studio which is a new program, right? A relatively new program, to maintain our athletic fields, to maintain our athletic facilities, because everything has a useful life, right? And has to be replaced. I would hope that we look at our less offerings, K through 12. I think we should be looking at what efficiencies in terms of enrollment, and what savings we can achieve there. I think our Elementary Plus program is an expensive program, and I'm not convinced that the delivery is the best way. I would hope that maybe we can look at a way of delivering that program in better manner than we are doing it now, which may not be a dollar savings, but maybe will be more impactful for our students than how I just, 30 minutes twice a 6-day cycle to me is not an efficient way to deliver that content. Are there other ways we can integrate that program, right? Are there after school opportunities we can have, especially at the elementary level, with the clubs, that we can reinforce that program offering? So I think those are sort of some of the big sort of picture ideas that, you've touched on, that we should be looking at. Lisa mentioned, class size. That is really capped at the elementary level by contract. We are on the lower side now than we have been. We're on the lower side than we have been in the past, but higher than we were, in more recent years. But are there ways to increase our efficiencies in terms of elementary special education services, more parity in offerings? Are there ways to make our delivery of elementary education more efficient, where you don't have disparity in class sizes that we have seen in the past from building to building? So, those are just some ideas.
Thank you very much.
Welcome to this side of the room. I'm probably going to echo a lot of this, but it's all important, so I'm going to do it. Jamie and Chris, thank you so much for setting the stage for this discussion so brilliantly. That was a great presentation. I want to start by saying that in a nutshell, our district is in an extraordinary situation for both better and worse. On the better end, quote unquote, our faculty, our administrators, our staff at every level in every position are carrying out a superb education program from A to Z. On the worse end, as we know, we're entering a period of unprecedented challenge from the loss of so much tax revenue on the heels of the enormous challenges we were just coming out of that we faced during the height of the pandemic. But we met the pandemic challenge, and I know our leadership, I see you showing us the way to meet and overcome the fiscal challenges that will be with us for a long time to come. It's a huge task facing all of us, but primarily you, our leadership, and central office staff, to whom the bulk of this task falls. And I want to acknowledge that and thank you for the work you're going to do in advance. The process of crafting a zero-based budget is enormous, to say the least, and our most important role is to support you in that task, which starts in earnest tonight with our ideas about big picture priorities. So many of these have already been mentioned and discussed, not just tonight, but over time, but I think they bear repeating because they are the cornerstone of what we do. So I will echo Lisa on the fact that for me, the first step, the first priority is maintaining and striving to improve our educational program. Obviously, we do have to do that while balancing our budget against the enormous fiscal stresses we face, but we have to find those efficiencies and savings without any students experiencing anything less than the excellent education that is our hallmark. That's just sort of be emphasized enough. That includes special ed services as well as extracurriculars. In other words, we don't want to cut programs. But as has been pointed out, perhaps we can look for efficiencies. Looking at contracted services to see if we can save by bringing them in-house, and the reverse situation where we might have a full-time position currently filled without a full-time need. building on that, how do we know if everyone in a building who isn't in front of students all day is fully employed? Perhaps there's room to shift responsibilities rather than contract for services. These are things you are way more expert at than I, but just some ideas that floated through my head while I was thinking about this. Similarly, on the infrastructure priorities, I think they do continue to be priorities. It's not an area where we can do a lot of deferment. We want to, and that's precisely because we want to protect the investment we've already made in infrastructure, and we don't want to, by deferring, we would put ourselves back into a situation that would be more expensive to climb out of. I'm hoping, as a small example of that, or relatively small, maybe not so small, I'm hopeful that we can revisit the electric bus project with an eye toward the savings that it can potentially produce in the future as mandates arrive from the state to implement such technology. Since our annual revenue loss, as we just heard, will continue over the next quite some number of years and accumulate to over 38 million. Trying to invest for future savings, so to speak, makes sense, which speaks to the capital reserve, which I think, we're certainly all hoping can happen and will pass. I'm really eager to move forward on that myself. I do think that underspending the budget is one of the somehow, all these the way we find efficiencies is going, and new techniques such as the NICLAS investment pool. These are things to help us underspend the budget. But I also think that we are going to have to make really hard choices. Marianne spoke about some of them, but I would certainly be loath to approach anything that cuts our program, although I would agree that the 6-day cycle is not ideal. But that doesn't mean I want to cut it. I think what you actually described would be a great enhancement. So for me, the really hard choices, I think have to come in more administrative areas and functional areas. And I'm going to raise the one that I've been, that's been a bee in my bonnet. Things that could be deferred are things like the electronic sign out front, that I know has been in the offing for a long time and nobody wants to see it go. But that to me is the kind of hard decision that would be the least disruptive and provide some significant savings. I, of course, in terms of going after grants, I'm eager for, just in my role as liaison to LAC, that we, that I can help, that LAC can help participate in that, pull together perhaps community participation when we do our legislative events, in terms of identifying and lobbying for more money. I think that will be an important area. And in the area of improving administrative systems and processes while also looking for efficiencies, I was thinking that we might have some areas to look at in terms of uniformity and consistency of procedures and tools such as technology across schools. I'm thinking particularly 6 through 12. It seems I wonder, I'm really pulling this out of thin air, but I have a general sense that we have a tremendous range of tools available that maybe are duplicative, and technology can be expensive, so there might be an area that we could look at in terms of underspending as well. I think because so much of the other things I wanted to mention really have been talked about at good length, I just want to end with a little request regarding the budget narratives. They are so helpful as we are, at least for me, going through, what is it, a 3-inch, 4-inch thick binder that we carry around for a long time and try to absorb. I think the And I think actually at the audit meeting tonight was another good example of there can really never be too much explanation. That's work, but, so I'm not necessarily asking for more of it, but more targeted, comparisons, across time. Especially and reminders perhaps of the anomaly years like the pandemic influenced years that really put strange numbers out there that are not necessarily reflective of reality. I'm going to leave it at that, but thank you again for a really good presentation and for getting us going.
Trustee Mosca. And now to you.
Well, thank you to my fellow trustees for some really incredibly thoughtful remarks that don't leave me a ton to talk about. But what I appreciate in this budget priorities especially is the compounding effect. And in my head, unfortunately, it's about $170,000 per year, and it's like a very well-paid teacher that we lose the revenue from it. That's how I kind of see that in my head, which is really frustrating and unfortunate. And I'm so grateful that you were able to highlight really the total fiscal picture for us. And in fact, I was looking, and in the 3 years that I'll sit in this chair, it will be the 3 sort of most impressive losses that we have to endure. So, which is the reason that I sought this chair actually. And when I was campaigning it and meeting with community members, really what I talked about is during this process, really preserving the robust opportunities at each level, that we think about our most vulnerable learners, and we think about the general ed, for lack of a better expression, and then really our highest achievers, again, forgive me if this is not the right vernacular, and creating what makes us us. And I know that's how we started, talking in the C, and I've said it, those exact words that I stole from you, Dr. Z. But that really, we could easily slash and focus on test scores and become a different district in this process. And I think it's so essential that we find ways, and different from some other trustees, I think that while census and enrollment are very important metrics, I'm most interested in, how do our course offerings, how do they tell the story for a student and provide those individualized instruction that's so important. I mean, we're not the least expensive district, right? And part of that cost is because our census tends to be low, but the opportunity cost of really providing individual pathways in all different realms. And so I would like to see that persist. Clearly, we have to continue exactly as we laid out to look for opportunities to be more and more efficient. And I'm so relieved that there is this very clear path that you've set for where to cut and the numbers and that we are not looking to shift the burden onto the taxpayers. That's important because we need these budgets to continue to pass. So moving on from there, I just actually expanding on that for 1 second. I think also and Lisa mentioned this, that special education in particular has been a huge investment of ours. And I think that that's so important that it persists because, if we're great at teaching our most vulnerable students, it impacts throughout the district, and that all students benefit from that ability to be flexible in our teaching ability. And so a part of the priority for me is forward thinking and making sure that we're continuing to be using and involving teachers in the decision of how the professional development can continue to be evolving and maintaining, that we're continuing to prepare our students to be, the most to achieve in the best way possible. Part of that for me too is the extracurricular activities. I think there's so much self-discovery that happens outside of the classroom that helps them understand what they want to pursue in the classroom. I know it's an investment, but I think it's so essential to the success and to love coming to school. And that includes sports and the arts and robotics and all the different realms of opportunities. I really feel that that's something that we can't afford to lose. the personalized instruction, our infrastructure, which other trustees mentioned, and that's why the cap reserve is so important, especially with respect to the busing priorities and some of the big expenses that we have coming down the pike. I've said before that I know we have a turf field that we have to address, and I would like to see the next turf, that replacement in the cap reserve, so that we're really thinking down the line. You know, Dave has mentioned in previous meetings, thinking like what you know. What don't we know? You know, I thought I can't say it better than that right now, unfortunately. Okay. I want to make sure. Creative and specialist. I think everybody has covered it. With respect to FLES, I agree that it would be really nice to see, you know, it's evidence-based to, the kids' minds are the most flexible earlier. And I love that we use that. We are unique in providing that in kindergarten. I think it's so important that we use that evidence-based plasticity for the acceptance of foreign language. And if there's a way to make that more efficient and more robust, I'm all for that. I would like to see some metrics about IB and AP. I mean, I know that this has been studied ad nauseum. My fellow trustee made some assertions about the efficacy of each program. So if that's something that needs to be reinvestigated, I would love to see that data as well. And that's all I have. Thank you.
So thank you very much. I think that leaves me. And I'll try to be efficient with my words. I want to thank my fellow trustees, thank Chris and Jamie. Carol, the time of you being off the radar is ending very soon. So you're on our radar, of course, but so much of this is going to fall on you, because what everyone keeps saying, and of course I want to echo, when people talk about preservation of our program, curriculum, instruction, this is where it's at. And I think that one thing that's been hinted at, but I guess I'd like to say it in these words, which is a continuation of our progress with adherence to what our core values are as a district. And while that may be the SVOs explicitly, I think there are other implicit values that we know we share as a learning community that need to be maintained. I want to thank you for the emphasis on underspending. And I do agree with my fellow trustees about administrative efficiencies, but I think it's also worth noting, which I don't think is in opposition to what anyone else is saying, of course, when we've done studies that our administrative spending is on par with others in our quadrant. And I think that the very successes we describe having as a district are the result of a purposeful approach to our curriculum that cannot be separated from the work of our administration. And so, yes, what goes on in the classroom is certainly directly a teacher, an aide, a student. But I think that what informs that process is something that we must make sure we maintain as well as we look for those efficiencies. There is an area that I kind of want to come at from a different direction, which is in the backup, we had seen the enrollment reports for this year, and we have three of our four largest current classes are currently at the middle school. And the second largest of the top four is in our 5th grade. So they'll be in middle school soon enough. I want to end their elementary journeys, but it's coming. And it reminded me of in 2019, in March, we did a demographic and enrollment study that was presented by BOCES, and President Jones at the time and I spent a lot of time peppering the presenter about all different aspects of that, specifically relative to building capacities. And that became the foundation of what we identified as the building that was closest to full capacity use, the middle school, and became the area that the majority of our bond work was done. And just in time, of course, because number one, our current enrollment of 2560 is actually, despite what some folks may say, is actually a little bit larger than it was in 2019, and has continued to plateau. I also did a study of about 20 cohorts on my own, just seeing how they progressed over the years, and they averaged a growth of about 60 students. So an incoming kindergarten class that might have 160 graduated at about 220. Very, very rough numbers. Because as we all know, people move here with kids. Not everyone is born here and has their students here. People move in with multiple children, and so The fact that those four largest classes are 5 through 8 right now is I think important to notice. And I think it's also worth saying, and the reason I bring this all up right now is because this board historically has not made capricious decisions. We don't act on whim. We use the data that was in that study to drive that bond work that is now servicing those students. Not that the work is completely done, but it's pretty close at the middle school, and those kids are in that building now, learning in these new spaces, in those new labs, in that new general area where they can learn the way they do in the new STEAM room. And so that's really important. Looking forward at this year's budget, I want to make sure using that backdrop as a lesson, not just to focus on where we are, but where we think we're going. It's not the time to be looking at necessarily growth or future projects the way we were with a bond, but we know, as many trustees have mentioned, that the maintenance of our facilities and completing the existing work in this inflationary high cost of borrowing world is our challenge of right now, especially with the continuing decrease in LIPA's contribution. But we also know that, like our own homes, the physical plant is not frozen in time. It ages, it breaks, things leak. Dance programs need space, turf fields need replacing. And so I want to see, as a budget priority for this year, a look at our physical plant from 3 specific lenses. The first are specific needs that cannot be postponed, things that are going to need our attention in both the immediate and medium range future. I think we need to know that pretty much now because we have this limited funding. Not now, like today, but in this year's cycle. And I think that, as has been mentioned, a big part of that should be a focus on the capital reserve. I'm not picking when that is, but I think it should be a priority. The second, as has been mentioned, should be areas of potential savings as well. This room is beautiful. The room is gorgeous. The buildings are gorgeous. There probably are some paint jobs that could maybe be postponed a few months at times without ruining the beauty of our spaces. And I think those little things are important. General maintenance that can be stretched out, potentially storage facilities that have trees fall on them that are covered by insurance, which may not need to be replaced necessarily. I think those are things we should be looking at. There's no magic bullet, but given the situation, we cobbled together a series of the smaller savings. And in the end, if that adds up to the cost of a teacher or another important personnel position, this is the people business. And the third, which I'd like to seek out additional revenue sources through the physical plant. And I see that either using leasing or renting unused spaces within our physical plant as a revenue source. It could also take the form of identifying unused spaces that we consider offloading or selling. This came up years ago when Dr. Melnick pulled together the Superintendent's Council, and I've talked about it before, but I think it's important to mention in this conversation. Selling off property or land is a one-time influx of cash, and you'll never have that land back. But as someone who lives only a few footsteps from here and still walks the dog around here and sees it, the fields that are on the side here, from the way I've been described, as a baseball field that's very rarely used, and 2 other sports fields that are, what I've been told, and I'm not sure this is accurate or not, I really don't want to go out on a limb and say this, are maybe not optimally sized for what they're used for. In addition to fringe area around on those streets that we have seen people build residential homes on similarly small plots, and potentially turning something like those 3 fields that maybe don't have a specific purpose into 2 fields that have a much more frequently used purchase that would enable us to potentially sell some of the surrounding land, turn into revenue that would be future taxpayers and attendees at our school, so we could have more great people going through our buildings, I think is an area that I would like to see. So that's the big piece. The rest I have bullet pointed, so you'll be quick. I think it's worth looking at staggered class offerings at some of the upper levels. Some of the electives, I wouldn't want to reduce them, but if you could offer them less frequently, that might still give the students the opportunities. Certainly in the arts, whether you're doing ceramics or photography, I don't think they need to be run every semester necessarily. We can still make sure that through strong counseling, you can ensure that students don't have any opportunities removed. They can just switch them around a little bit. I think that hasn't come up yet, but the continued and transparent use of the balance of the settlement monies, huge priority this year. We should have 2.25 million after we get the next 750 in July. And I think that is going to have to continue to be a ongoing iterative process throughout the whole budget season. And the only other thing I'll say, well, first of all, I'll say I love in the presentation that in one of the slides you already put this year in the rearview mirror, so it seems like the bite is much less severe. Like, oh, we're going to do the first 3 million. But I like the way you framed it as seeing challenges as opportunities. I think that's a growth mindset, and that's the way they have to be pursuing this. Fellow trustees, and to Jamie and Carol, and I think with that, unless anyone wants to add anything else, we will move on. Thank you. We'll move on to comments from the public. Anyone have any thoughts or they'd like to share with us? Okay, we will move on from comments to the public and move on to action item 11, which are personnel action items A through G, as in George. Is there a motion? And I heard a second as well. Comments or questions? See Mr. Hurt coming back for more. So that's terrific. All in favor? Aye. Action 12, which is an exception to the community education policy. Is there a motion? And a second? Any comments?
Oh, okay. I just wanted to point out, this is a temporary exception. This is, okay. That we mentioned a little bit more about it, just that we will be reviewing this policy and, figuring out how to move forward, but this is a temporary fix for an issue that's come up.
Yes, no, that was perfect. That's exactly what it is. And I think the concern is, and several trustees did reach out to me about this because, we just want to ensure that it's not bypassing the regular policy making or policy changing process, which it is not. So, just after speaking with council, this allows us to accommodate a situation in our community education program where we do have younger students involved. Our policy right now says high school students can be involved, and that then just gives us time to consider a policy change for this. That would be more permanent for other programs. This is really just for this one program for this set time now, the winter, because this program has a concert coming up.
I will call the vote. All in favor? Aye. Thank you. Action 13, and I want to be clear as I go through this that on the public agenda, it's action 13. I'm going to ask for a motion on 3 change orders. The first is one with Cooper Powered Electric. The second says Cooper Powered Electric. The resolution itself is correct, and it says Hirsch, which is the company that we'll be using for that one. So I want to make sure that that is clear. And the third is with Simbrant Technologies. So asking for a motion on change orders from Cooper, Hirsch, and Simbrant. And a second? Comments or questions? All in favor? Action 14 and 15 I'll take together. District of Location, District of Residence is one, and the other one is from Special IEP Services. Is there a motion? And a second? Comments or questions? All in favor? Thank you. Board committee reports. It has been a long night. We want to make sure we hear everything, but these can be very summary. So I'll ask folks to again, go through your committee work. We have reduced these for the public from what we typically do, so it's not quite as voluminous, but we do want to hear what's going on in a summary fashion.
Gonna do it.
Had my notes, but I would love for you to do it.
Okay. I didn't realize we were doing these tonight, but I do have my notes from our last meeting. So if we're going to keep it succinct, phase 1 is in the punch list stage of our bond project. Phase 2, as you can see from the outside, we're in the middle of, well, still involved. Much of the work has been completed. We still have some work at the elementary schools going on. Some finish up work at the middle school and the high school. If you go by the front entrance, you can see that was supposed to be phased over a couple of periods of time, phase 2 and phase 3. So we're working on getting those things done. We hope to have the elementary STEAM rooms and libraries completed by the beginning of next year. So our students can be utilizing those beautiful new spaces and the STEAM room. We've started on the energy performance contracts. We're working on getting the HVAC systems and the AC systems up and running completely. Hopefully next spring on a hot day, your kids will be nice and cool in their buildings. You'll see some of the solar work going on. It's been pretty much completed at the middle school. It's ongoing at the high school. What else do we have going on? We've done some work that you haven't seen, which are boilers, heating, things that are not apparent to the eye. The high school, we are finishing up on the work in the wood shop, the robotics lab, the fax classroom. We hope to have that completed by the end of the semester, right? But that's what we're looking at.
Yes, and hopefully sooner, but
Hopefully soon, but
yeah,
no later than the library in the high school was not intended to be done right now. So I know that look at that. So the library in the high school, which is really going to become an updated media center, really needed a facelift and to be brought into the way students learn and work together. We hope to have that done by the middle of the next semester, right?
I think that's accurate. Yeah,
I don't think it won't be done the end
February.
of this year. It will be done more like the March,
yeah,
February, March, and in that area. And there's always so many other little projects going on. I don't think I need to bore you with. We are planning phase 3. So that is being planned out now. So that will kick off in June, July,
Last
the
week.
end of school.
Yeah, right. On the last day of school at 3 p.m. That's right.
Right.
Or it's
You'll
a half
see-
day, so 12 noon.
Right, but you will be providing
Seriously.
the weekends and holidays and breaks. You'll see people working away to finish up those open-ended items and complete what we've begun. And we're looking forward to phase 3 and finishing out the bond.
From my perspective, thank you, Marion. Other committee work.
Two of my fellow trustees, normally on the district-wide safety committee, are not here tonight. I should be reporting on it, and I apologize also for not having my notes. I can say off the top of my head that it's going well. All of the deadlines that have to be met with the state are being met. Drills are being performed, and I want to just add a personal note that Mr. Glennon, our new, I don't know his formal title, security director. Yeah, is terrific, and welcome him. I could also report on LAC, that I did remember. So some highlights, it's great. It's terrific to have the committee fully constituted. We welcomed our new members last month, and quickly went into a special meeting with our district lobbyist, Nicole Weingarten of DHC, which was very informative and motivating. And I think this is going to be a good year for this committee. We have a meeting next week where we'll be finalizing subcommittee assignments devoted to 6 or 7 of the directives provided by the board, and I'll just talk very briefly about each of them. So, environmental hazards and emerging issues is one. Development and IDA monitoring, and I want to say thanks to Lisa Cashman for forwarding the draft environmental impact statement that just came out, or actually came out, I guess, last month, a few weeks ago, for the Engineers Club development. And that'll be something this subcommittee can will sink its teeth into, I hope. Our legislative outreach subcommittee is going to be responsible for specifically for our signature events of a private, not private, I'm sorry, lobbying breakfast with legislators now that the election is over. We know who to invite, and we'll get going on that right away. And the public legislative affairs night, which we hope will take place in the late February, early March timeframe. We'll have a subcommittee for community outreach, which started last month, or at the end of September. I guess we had a good start, but we have a packet of information now, a handout that we had good success. We exhausted our supply of packets at the high school back to school night. So that was excellent, and we'll keep adding to it as Dr. Z churns out these wonderful information pieces on anything and everything, mostly so far still on LIPA, but it's been terrific to include those in the packets. We'll also be making presentations to parent organizations and other events. And finally, a legislative monitoring subcommittee, which will, keep an eye on recent developments that we can be a part of, that will coordinate with the community outreach subcommittee on pulling together community involvement for support, identifying grants and financial aid for the district, and basically working as closely as we can with the administration on trying to move some of these initiatives forward for more state money. And we'll be keeping an eye on the recent news about state moves towards full legalization of LIPA, how that might affect us. It seems to be a little bit of a concern, at least in my mind. So those are the high level bullets for LAC.
All right, thank you. Lisa?
Okay, I have a wellness committee update. The wellness committee met on October 17th. Unfortunately, I was unable to attend, but Dr. McCary gave me a brief update to share. The committee discussed the results of the Pulse survey, which was distributed to 6th through 12th graders. The overall results were very positive, suggesting the students like school, feel they belong, and feel they have a trusted adult at school. The scores were a bit lower, but in the 8th grade, where we need to explore the data further. And they also discussed the possibility of sharing the data with the students themselves, conducting a follow-up survey, and having grade level meetings. Quick one. Athletic advisory is a little longer, sorry. We met on October 24th in the high school cafeteria, and we're joined by 5 students who participated and gave us such great insight into their experiences. I'm always so impressed with how smart and articulate our students are, and they're willing to share their thoughts even when they disagree with the majority, and it's just so refreshing and a testament to the great education that our teachers and administrators are providing. So at that time, Mr. Lang was hoping to have all the open coaching positions filled by the following week. So I'm not sure if that was actually done, but that was the hope. We talked about considering a parent liaison for each team to work together with the coaches regarding communication, and also discuss the activity scheduler app to assist with knowing all that's happening with any games at any given time. We talked about the huge success of homecoming and the Hall of Fame induction and ceremony, and trying to possibly replicate the success of that event into a spring event. We talked about the tutoring policy, which, the committee talked about the need for the change to the policy in order to hire the most qualified coaches. And we hope the policy committee will look at how the policy is directly impacting the children of the district. We talked about the attendance policy and having a subcommittee of the athletic advisory committee to look at specific situations. We also talked about PE exemption and agreed that we need more data to see how this would be a good fit, or whether this would be a good fit for our students. And also about Passport for Good, which connect athletes and service. And it's a good way of collecting community service for our athletes, with things we were already doing, like the football team at Gold Coast Library and older athletes mentoring younger students.
Thank you. Other committees we have not mentioned. I just bring the mic in a little bit. I think you should tilt it down a little bit.
Hello?
Oh, there you go.
Okay, there we go. So for policy committee, the only thing that so far we have talked about is the particular, coaching tutoring policy that, trustee Colasiopo has just mentioned. We're currently in data seeking mode on that and have not come to any sorts of conclusion. And we're eager to start to address some of the other policies. So that we're eager to move on with this one so that we can move on to other policies. And that is really it.
Those are our committees. Thank you, trustees. We will now move on to, sorry, Chris, move on to unfinished business. Is there any unfinished business out there? Of unfinished business, and it relates to what we've been talking about, which is the coaching and tutoring policy. I'd like to propose that rather than have us go around and around and around with coaching vacancies in a season that are, we're not, those dates are not moving, and yet we're also not moving, and we're hurtling toward that. I'd like to ask that this be made an agenda item on December 1st with a presentation by the administration to include the context for the previous policy. I can go over this with you separately, but I'll say it now. Include the context of the history of the policy change, the reasons it was made, the sports that are most affected, those that have clinics and travel teams, how other districts handle this, what effects tangibly it has had on our ability to procure coaches. And the goal would be to present a policy recommendation and have a hearing so we can get somewhere on this.
Excuse me, can we make it December 15th, December 1st? I think trustee Galati is away and he was on the policy committee and that changed the policy, and he's also on athletic advisory committee. So I know he's not able to be here on the 1st. Could we do it at the following meeting?
Benefit to that would also be that it gives our policy committee a few more times to meet and maybe help solidify a recommendation potentially.
Something open to discussion? I mean, I'm curious. I understand the frustration of it taking time, but it is it's a deviation from the normal way the policy committee works, right? And the way we evaluate and review and propose changes to policies.
Yes and no. I think that's true, but I think that we've set this as a priority. This is my take, and certainly, we as a board have to come to consensus on this. But I think we've been looking at this and reviewing this for months, and it is now mid-November, and we're not getting anywhere. And I think that there is a tremendous amount of frustration out there. And I think that from a transparency perspective, my personal opinion is that this needs to be brought out of the policy committee and into the public. I think it's important at this point. There's been a lot of discussion about this and a lot of talk about this. And I just think we're not getting anywhere. And I think it is, there's a clock that's ticking.
I don't think 2 weeks is going to make a difference, Dave. And I really think that Rich should be present for that discussion.
Just for the record, I'm really hesitant about it's a change in policy, right? I mean,
so there's two issues. Number one is whether we try to have the full board, including trustee Galati, here for it. And the second is the general idea of it essentially moving beyond the policy committee.
Yeah, I mean, I think, the policy committee has an enormous number of policies to review, did take this on out of order, while other very important policies have been put aside. We have not been working on it for many months, but that is the policy committee. I'm only one member of it. I'm just stating my opinion. So I just, I don't think I don't really like the precedent that it sets that, that the squeaky wheel gets the grease, and the normal manner of review and, recommendation and approval and second reading is, or first and second reading is bypassed. I do not support that we bring it outside our normal procedure.
not
I'm
on
in-
policy, so,
Well,
oh, I'm
hold on,
sorry.
Lisa, yeah.
I'm sorry.
So I just want to say that I'm in full support of bringing this to the full board because I also, sitting on athletic advisory, we have been talking about this for months. I know that policy hasn't, but I do think it should be a priority because it is affecting, at least I think, and maybe we can get more data. I think it is affecting our hiring and, hearing from our administrators who seem to want the policy to change. I guess the precedent for me is we just approved a policy change today of a policy that the policy committee has never looked at, but we made a change without it going to policy. We made a modification. So I think that we absolutely should look at it. And I think for me, it's fine to wait until the full board is here on December 15th. I don't think 2 weeks is, going to make a huge difference since it's been sitting for so long. But I think that when something is not working, we have to look at it and see why it's not working and see if a change in policy is necessary. So I think, I am in full support of bringing it to the full board.
I ask a question of the policy committee members because I'm not on it. If we have this discussion on December 15th, does that give the policy committee enough time? Do you have another meeting scheduled? Because I know we have Thanksgiving in there. So that's my question to you, that you can come on the 15th with a recommendation from the policy committee to the board.
I don't know if I'm speaking out of turn, to say that I don't. I am, okay, I'm not going to go there. Yes, we have another meeting scheduled, as soon as possible. I think it's, yes, we actually did put 2 meetings on the calendar, because we do recognize that this is important, that there is a groundswell of, request for review. I just, I think that we have policies and procedures for a reason. We are working, believe me, as hard as we can because, as I said before, because the policy committee also, there's just never enough time in the day, right, to do anything in our lives. So this committee has not had a very regular schedule, although we're trying very hard to meet more frequently. Because last year we didn't get through all of the 1,000 level policies, which was the goal. And so everything's been put on hold. I want to emphasize that we hear, the groundswell of request here. It's not that anyone's being ignored. I object to that being the thing that there were extenuating circumstances on the one we approved today. And I did take pains to say that it was a temporary measure only to get through an extraordinary situation. And that decision was made by the full board under advisement from council. It's a slightly different situation than this one. I think we're on a slippery slope changing our precedent. I certainly commit to you that I would try to be ready for the 15th. I just personally don't feel that it's, for us to set a deadline.
I wasn't trying to do that too. I was quite honestly trying to do the opposite. Really, I was
Give me
trying
a chance to say, no, we can't possibly be ready.
Yeah.
I don't want to do that. Not
no,
my goal. I want to get this done also.
I don't, my point in asking you if the 15th was enough time was because you mentioned that you were getting data on it, right? I just want to make sure that by the 15th, the policy committee will be ready because I don't want you to feel like you're being put on the spot. And I know the difficulty in getting multiple schedules, especially during the holiday time, concerts, Thanksgiving, there's a lot going on, right? So that was really, I was not to put you on the spot, and I do agree.
I realize that it was too.
I know, but I do think that the exception that we made tonight was just that. It was an exception. It wasn't a policy change. And I think it's very different to make an exception to the policy, which we sometimes do. Maybe sometimes not formally, like students location of where their school they attend, right? Sometimes those exceptions are made and it's an exception to the policy. It's just that it's an exception, right? And I view that this in the same level. I just want to make sure you're ready for that. I don't object to putting it on the 15th. I do object to putting it on the first when Rich isn't present. I do know it's important for the athletic community to have this discussion. I thank the policy committee for taking it out of order. But since we have taken it out of order, if we could put it on the 15th, that would be great.
First, I'd love to hear your.
Just super quick. No, yeah, the community ed exception, that was for that specific situation. And I think, and I don't want to speak for policy committee, but I will say to just that concern that I'll do everything. And I'm already starting to, I'm speaking to other superintendents. I really am doing research. I think what happens when we go into this is it's so complicated because it involves the coaching that was added on, but it's about so much more than coaching. It's about tutoring. It's about conflict of interest. So I do want to say I understand the frustration from the athletics parents who are looking at this, but it involves so many different working pieces of our district. And such big concepts that is really what it is. It's not about us, not being concerned with what the any side of the community or any activity for our students. But really, it really gets at the core of some of the issues that school districts struggle with. And one thing I can tell you is from the learn in the last couple of days talking to superintendents. Districts are in very different places on this. So, but I will do my due diligence to get us ready to look for suggested language. And if we could, if it is on the 15th, treat it as a first read. So it stays within that normal process.
The only thing I wanted to add is that I'm so in favor of this being discussed in the style that Dave recommended, because the information is siloed among communities who are very much for it and maybe very much against it. And there's if you speak to them, we were at the booster meeting on Monday, there's a lot of confusion as to how we got here and, the changes, and to have an open discussion and a presentation as what was recommended is not meant to steamroll us into a choice, but rather to give the community what they deserve, which is transparency about the history, the considerations, because it's not as easy as let's just hire more better coaches. There are other complicating factors that should be highlighted in the type of discussion that we are capable of having as a board in front of the community. And so that's why I think it's just so important, because the nuances are not being considered by all sides and it gives us the opportunity to just have a real open conversation about it. There's like allegations about how we got here, and all this misinformation is being allowed to persist because we aren't being as transparent as we possibly could be. And that's why I think this is just a great plan, personally.
I certainly have tremendous respect for the policy committee. I served on it for years and I tried to get on this year, to no avail. But I think it's also important to distinguish that our policies, that our committees, one of the things that we actually have as a goal for this year, is sharpening up the charge of our committees and how our committees run. I know when we were, and this is just one analogy, and then I have two others. But the first analogy that I keep having is when the LIPA settlement was going down. And we were at Nassau County, Dr. Dolan and I and our attorneys. It had to emerge by law from committee in order for it to be discussed by the body as a whole. That is, I assume, the law of Nassau County government. We have, to my knowledge, no such laws or policy that things have to go through the individual committee beforehand. So I think of this conversation we're going to have, these are the two other analogies I have, are the conversation this board had about masks and the conversation we had about the use of the $2 million settlement. The mask touches on wellness, it touches on health and safety. The settlement money, that's technically for a specific committee, but I think it was an opportunity for issues that were involving so many aspects of what we do as a board that I think it was helpful to the community, not just from a transparency perspective. I think those are good points you raised, Lisa, but also from an engagement perspective, to have folks realize what we're grappling with, that, as I mentioned earlier, the decisions we make are not whimsical, they're not capricious, they're not just based on, what we all feel or what's good for our kids or what's, this and that. Although we are very much driven by student experience. And also that in terms of structure, in terms of the way that these things work, more than what we do as a board, and I did make this point at Booster Club the other night, if you're in a school district where the board is dictating to the administration what to do in a very overt way, it's generally not the sign of a healthy functioning district. And so I know that I can tell you, I think we all know this, Chris has been really grappling with this. I picture you like, you have those crampon things you wear when you're climbing the ice wall, like you're really trying to get around this, not around it, but get us into a place where we can move forward. And I think that we owe it to the community at this point to be able to, I'm not saying move it forward because policy committee has let it stagnate. If I did say that, I apologize if I said that, and I apologize if I implied it, because I do not feel that way. But I do feel the concern over the specific time sensitive nature of this for student experience, and for rifts that it's creating in the community that I think we need to head off at this point. That said, if people feel strong about December 15th, that certainly is fine. You're really right. 2 weeks is not going to prevent things from happening. So that's my unfinished business.
I loved what everyone has just said, but Lisa, that was really eloquent. And Dave, I don't disagree. I wanted to ask, Dr. Z proposed that we treat the 15th as a first reading. That would at least keep us within the
Absolutely.
normal procedure.
I don't know
Is
that
there any
we're,
objection
no, I think
to
any
that?
policy change
Right.
has to have a reading before we go forward. So I
Okay,
certainly
thank
was a yes. I was doing the first as what that would be, but if it was going to be the 15th, that's
So
certainly
I
fine.
do think policy is different than talking about masks or because it's a policy.
Yeah, mass
It's
was,
a
yeah.
formal policy that is on the website that people
That's true.
look at. It's not, mask was something that was in an emergency situation based upon the information at the time. It wasn't
Yeah, we did have a policy about it, but you're right. It's not a board policy.
not a
It's more
board
of
policy. It's not a
correct.
written policy.
Correct.
It was something different. You're
Yeah.
talking about policy. And I think policy, I agree with Lisa, has a protocol and we should be following the protocol.
The 15th it is. All right. Any other unfinished business? Any new business? Adjourn. I don't think that's wrong.
No. That was very bad.
Has some
That was not a good time.
PTSD.